Is this the start of a new bull run? Bitcoin's price has increased over 50% in a very short period of time. In this video, we're going to look at what is going on with the price action of BTC and whether or not this is, in fact, the new bull run starting. As I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. Let's see if we can hit 2,000 likes on this video. It would be absolutely amazing to hit such a target. So light it up if you do find it useful and informative. And if you're new to the channel, why not go ahead and subscribe by tapping the bell, selecting all the notifications. You will not miss another video update here at Cheeky Crypto. Okay, let's get right down into this one. Bitcoin paired up with USDT on the weekly chart here, and Binance is the data source. Now, as you can kind of see just over here on the right hand side, if I measure the distance from the lows of November up to the recent highs that we had earlier this week, it's 53.89% increase in Bitcoin price. It's pretty significant. Now, as I zoom in on this recent price movement, you can of course see that this is the area of the 200 EMA. Now, this EMA is on the Bitcoin USDT pair. It is a different EMA level on the USD pair. Just bear in mind that we are looking at Binance specifically and the USDT pair when it comes to this analysis. And this shows us that the EMA is at 23,703. Whereas if we look at it from a USD point of view, it's actually around $25,000. Now, we have highlighted up here the area of 24,300 to 25,200, this yellow box, and this actually symbolizes an area of supply. This is where Bitcoin's price rallied to before coming back down, and this is where a lot of liquidity sits. This also happens to be where the USD 200 weekly EMA sits as well. So we could see a wick up here, hit this area, and then pull back down, basically grab that liquidity before correcting down. Now, the question on everyone's lips is, are we in a bull market or not? And unfortunately, I don't think we are in a bull market at the moment. I don't think the data really suggests that we are. Now, if I come and bring up our data here for on-chain metrics when it comes to BTC, we can see that we've had in 2023 726,000 Bitcoin going onto exchanges, with 775,000 Bitcoin coming off the exchanges. That is not a lot of accumulation between those two differences to say that there's a lot of Bitcoin leaving the exchanges. In fact, very little Bitcoin has actually left the exchanges. This is also apparent from the net difference change on a 30-day average bar. Okay, so a bullish environment, you'd actually see a lot of these white bars down nice and low like this, below the midline. This shows us Bitcoin leaving the exchanges. This was happening during the FTX saga, where a lot of people were not trusting the exchanges, so were self-custodying their cryptocurrency assets. So you see all the outflows come in, and basically Bitcoin leaves the exchanges quite a bit. Then pretty much since January, Bitcoin's been flowing onto the exchanges. It hasn't been leaving. This is an indication that actually a lot of people are moving their Bitcoin onto the exchanges to be sold off, and we're not really seeing the demand where it's leaving the exchanges. Okay, this is also apparent here on the line graph on this side here as well. From an inflow and outflow point of view, we can obviously take a look at the line graphs on this. The last 30 days are showing us that actually all we're doing here is basically seeing Bitcoin transfer between participants in terms of whether they are whale investors or retail investors. Basically, we're not seeing a flurry of new demand. All we're doing here is seeing existing players move their Bitcoin around, transfer it between people, and that's pretty much it. We're not seeing terribly too much in the way of demand. So we should be pretty cautious here. The actual technical definition of a bull market comes in only when the demand is outpacing that of the supply. At the moment, the supply is meeting the demand pretty easily, and it's not actually being overpowered in any way, shape, or form by excess amounts of demand. This basically is unfortunately the definition of a bear market. So this, as we have been saying on the channel, more mirrors that of a bear market rally. Now, there are the obvious concerns that a lot of people have, and that is that this looks like a five-wave impulsive move. 1, 2, 3, 4, and 5, right? And we have this kind of trend to the upside according to Elliott Wave theory. However, under scrutiny, we do not actually meet the requirements of an impulsive structure. This is more visible when we jump down into the smaller time frame, specifically here on the daily chart, when we start to think about this move from the lows of June up to the recent highs up here in December. Do they actually look like they meet the requirements of a five-wave structure? We would expect 5 waves in here, 1, 2, 3, 4, and 5. like so. And a lot of people would think maybe that would be valid. However, the overlap between wave 4 and wave 1 would actually create a bit of an area of concern. It would basically mean that it would have to be in a diagonal structure rather than anything more than that. And for a diagonal structure, we still fail to meet our requirements within our structure for wave 3. Basically, we come up to a 1-to-1, basically only giving us really a 3-wave structure up, 3-wave structure down, 3-wave structure up, and not 5 waves at all. We would have been looking for this peak up here to actually be our wave 3 scenario under a 3-wave structure. So in an ideal world, we would have actually have seen, 3 waves in here like this. We would have seen 3 waves come on down. That's actually not too bad. And then we would have come up here into 3 waves like this, and that would have been great. Then we would have come down, and this was been fine down here. So we would have had this kind of marrying up quite nicely down here. And then we would have come up one more time into another 3-wave structure and completed it like so, right? And we would have had this diagonal, potentially even an expanding diagonal, considering the formation of those candles. However, that wasn't the case, and instead we ended up with this really aggressive, impulsive run upwards. Now, the issue that you have here is that actually all that's occurred here is a 3-wave structure. At best, we could probably go WXYXZ, but in reality, the situation is just this, and that's quite unfortunate because it does mean that we do not have the requirements to call this a 5-wave impulsive structure, even though we have this really impulsive movement to the upside, right? Now, impulsive movements are usually driven from demand, right? However, in the reality of the situation, it's not demand that's driven us further upwards. We can also come up to our weekly chart here just for 1 second, throw on our, let's bring up our stochastics here, remove the stochastic and show the volume, and you can, of course, see that the volumes have been decreasing. So although the price has come up higher here, okay, so we can see here that we go up higher high in price, we come down lower highs in volume. That means that there's no volume really of significance back in this price movement to the upside. This would be bearish divergence as well, where we go higher high on price, but lower high on volume profile. So we want to be a little bit concerned that actually the move to the upside isn't giving us a lot of confidence to think that a new bull market has started. Now, of course, we are up in the overbought area on our stochastic RSI. Now, we haven't got the bearish divergence here, not on our immediate weekly. But if we looked a little bit further back, we could see that we are lower high here, but we're higher high from here. Okay, so again, we can see that we're reaching these upper limits on our stochastic whilst not reaching the same level of price that we were previously. So again, we would look at that as bearish divergence there. This is also very apparent when we take a look at the RSI as well as the stochastic RSI, but I won't dive too much more into that in this particular video. Instead, what we want to do is we want to take a look at what is actually driving, or what has driven us to think about this as a bullish movement, what's tricking retail investors to think a new bull market has started, and what was actually the culprit behind the price movement to the upside. And essentially, it comes down to the DXY. Now, the DXY is a dollar index. Basically, how much is your dollar worth? And here you can see that on this daily chart, pretty much since September, actually this is a weekly chart, since September, we have seen the dollar index decreasing. There's a couple of green candles on wicks in places. It's quite interesting. If we throw it into a daily chart here, we can really take stock of where we were in December, and then where we peaked up here in early January, we started to really pull back down. Now, this movement to the downside on the DXY, this continuation of move to the downside on the DXY, pretty much up here since September, October, and November, is important because this basically tells us that we need to have more dollars to buy our assets, okay? So when the DXY goes down, or the dollar index goes down, it means that you've devalued your dollar. And if you're pricing an asset in dollars, well, all of a sudden you need more dollars in order to buy that asset, okay? So this is actually having a direct impact on the price of BTC. If we see red in the DXY, we'll see green in the BTC. And when we see green in the DXY, we see red in the BTC. Okay, so as you can see, most recently, the last couple of days, we have green in the DXY, meaning that we have red in the BTC chart. Okay, so really what has actually occurred here is a mixture of a couple of things. A small level of demand coming in, basically looking at a new bull run potentially starting, lots of retail investors kind of FOMOing in and buying up Bitcoin because they fear the opportunity may just come and go, and they may miss out on that opportunity, right? FOMO. And you then see the DXY dropping down, and basically it means you need more dollars. So the price moves upwards, you get a lot of green in the market, but actually in reality all that's occurred here is a slight devaluation of the dollar itself, meaning that you need more dollars to buy your assets. Couple that with a little bit of FOMO and you've got a recipe for a bit of a green market on BTC. So it's important that we understand that if price action of BTC is being represented through the price action of the DXY, specifically from late November, where we see the DXY dropping down the way that it has done, and more so ramping up the way that it did in early January, we take a look at the DXY, we overlay the two, and we can see there's a correspondence between where the FOMO is kicking in, taking Bitcoin higher, and where the DXY has dropped down and actually taken BTC to those heights. So knowing that the volume is down nice and low, or at least lower than you would expect it to from a bullish environment, if I bring up our stochastic RSI again, throw in the volume profile, and just remove the stochastic here, you can see that even on this recent move up here, right, this recent move where we're going up into higher highs here, we are also coming down and lower in volume. So even this most recent move is basically showing us a weakness in the price action. Not many people are actually participating. Again, we do have that divergence right up here with the higher high on the price, and of course the lower highs on the volume profiles. Again, you can see here that even from these lows, the volumes haven't been overly impressive. They did increase just a little bit down here, and this is the peak of the volume really coming in just here on the 12th of January. Everything after the 12th of January, the volume has been decreasing day on day, and we should be, aware that that is not overly a positive sign when it comes to BTC. Now, we have got some momentum shifting around. We can see that we're nice and almost oversold on our daily, so I do not think that we are ready for a drop in Bitcoin's price right now, but I am expecting a Bitcoin price correction at some point in the very near future. And it might be next week by the time that actually plays out. There's a lot of fundamental things that are occurring in the space that could potentially see BTC pulling back to the downside. Now, from our recent analysis on the hourly chart, we can of course understand that there is a move to come down, probably to test the 200 hourly EMA, and that'll put us roughly around the $22,400 level, finishing off our structured move before we maybe move on upwards. Like I've said before, this looks like we could be on the cusp of a diagonal ending structure. And again, that would basically be a 3-3-5 on the bigger macro, but 5 waves here ending with a 5-wave diagonal structure. Now, this diagonal structure could be an expanding diagonal. It's yet to be seen how that's going to play out. I do think we do have the ability to move up towards $25,000. That is where the liquidity is sitting. So I do think that there's going to be a liquidity grab there. The other thing that's really important that we talk about here a little bit is that there's always going to be a winner and there's always going to be a loser. We have to think about who is going to be benefiting the most from the most recent price movement to the upside. And I think that is most likely going to be the companies that are in financial difficulties at the moment, and of course those exchanges. I think there's a lot of money being made here, but it's not really being made by retail investors. If anything, it's being made on the back of retail investors. So let's keep an open mind as to what is going on. I'm not saying necessarily that we have to go down into new lower lows. There is a possibility of that as per our schematics on the Wyckoff accumulation pattern. Essentially, I do think we should be looking for a correction, either down towards the $18,500 or potentially into a new lower low. I'll leave this video right there. Let me know what your thoughts are in the comments down below. Really do appreciate that. Hit that like button if you have found this useful and informative. I want to see if we can get 2,000 likes on this video. That would be absolutely amazing. If you're new to the video, new to the channel, then why not go ahead and subscribe? I appreciate that. Don't forget to join us down in Discord as well, linked in the description down below, guys. Until the next one, have a fantastic day, and I'll catch you all then.